Hello and welcome to the Gold Newsletter channel. My name is Kai Hoffmann. I'm the @JR Mining Guy over on X, and of course, your host of this channel. And together with Brien Lundin, I'm hosting the Gold Newsletter channel. And we got an update for you. It's a corporate update, but with a new guest. We are welcoming back Equinox Gold, and we'll be joined by VP of Investor Relations, Rhylin Bailie, here in a few short seconds, because the company announced commercial production of the Greenstone Gold Mine. It's one of Canada's largest gold mines in production now, and we have to talk about it. We have to talk about how it impacts, Equinox Gold in general, and how the ramp-up is going. Commercial nameplate capacity was reached just a few weeks ago. Now it's time to get an update. Rhylin, it is great to have you on the program. It's good to see you again. Thanks so much for making the time.
Thanks, Kai. Thanks for having me.
Absolutely, yeah. But before we dive into the specifics of the new Greenstone Monster Mine, let's get an update on Equinox Gold. Who and what is Equinox, and how are things going?
Sure. Well, we started the company at the very, very end of 2017. We did a three-way merger between three existing companies, and then Ross Beatty joined us at that time as our chairman and our largest individual shareholder. We rebranded the company as Equinox Gold. Ross's very first company that he started back in, I think, 1985 was called Equinox Resources, and he said he was going to bookend his career with two Equinox companies. So we started off at the time, we were basically a single asset developer with one mine in Brazil that we were working on. We've done a series of acquisitions. We bought Mesquite Mine, then we bought Leah Gold, then we bought Premier Gold. And so we've grown very quickly in 6 years, and we've grown now to have 7 mines in production and 3 big development projects. We're going to produce about just over 600, probably about 630,000 ounces of gold this year. And our objective is to be a 1 million ounce a year producer. We should be able to get there with the projects that we have in our portfolio within maybe 3 or 4 years. And then we'll be a multi-asset, senior gold producer focused entirely in the Americas. Our projects are in Ontario, Canada, 2 projects in California, 1 Mexico and Brazil, one in Mexico and 4 in Brazil.
Fantastic, great overview to get the show going here. Rhylin, really appreciate that. But Greenstone is the big news. Of course, it's the latest producing mine here in the portfolio. Run us a bit through the construction process. Did everything go on budget, on time?
Yeah, it was really a phenomenal build. So we bought that project at the very beginning of 2021, April 2021. We started construction in October. Our partner at the time was Orion Mine Finance. So we owned 60%, Orion owned 40%. We started construction. And when we started construction, we said that we would pour gold in the first half of 2024. And we managed to do that, which was fantastic. Pour gold on schedule on May 22nd, 2024. And we also, in May of this year, bought the other 40%. So now we're 100% owner of this project. And it's full speed ahead. Greenstone will be one of the largest gold mines in Canada, and also by far our largest and lowest cost gold producer. So when operating at capacity, it's expected to produce around 390,000 ounces of gold per year, with all-in sustaining costs below $1,000 per ounce. So that really is a transformative year for us this year with Greenstone in production.
It's definitely a top 5 mine in Canada. Like, I put it even in the top 3, I think. Like, top of my head, I think Osisko Mines or Agnico Eagle. Now I'm drawing a blank. Malartic is bigger.
I think we're about top 5, yeah. But it's just to own 100% of such a fantastic project at the very beginning of its mine life. Of course, with gold prices at all-time highs, and this is just the open pit section alone is going to be about 15 years of production at the 390,000 for the first 5 years, 330,000 ounces of gold life of mine. But we're hoping to be able to not only increase that life of mine production, but also extend the mine life by developing the underground deposit that's almost also there. So we've got over 5 million ounces of open pit reserves, and then 4 million ounces underground that we hope to develop as well.
You announced commercial production in early November 6th, I believe.
Yeah.
How's the ramp up going since, and what percentage of capacity are we at?
It's going really well. I think we were so pleased with how the build went. We felt like we really knocked it out of the park from a build perspective, and we were hoping to be able to do the same with commercial production. Turns out we're just human. It's going exactly as all big ramp ups do. It's going to be a 27,000 ton per day mill, so it's a big mill with lots of stuff to finalize and tweak and perfect as you move through the ramp up process. But it's going really well. We're hoping to be around 80%, maybe even higher by the end of the year, and then at 100% capacity in the first half of next year.
Yeah, that's impressive, Rhylin. Absolutely, a big fan of what's going on, and of course without hiccups, which is fantastic.
Yeah. Not so good, please, when you say that.
Yeah, no fake wood here either. So that all the best there. But let's talk about the impact of Greenstone on the financials overall. Like you've published Q3 financials just last week, I believe, and all-in sustaining costs were fairly high at $19.94 per ounce. Run us a bit through the impact of Greenstone and what impact will Greenstone have moving forward.
Well, it's absolutely going to lower our consolidated costs because it's going to be our largest producer, so 390,000 ounces a year, all in sustaining costs less than $1,000 per ounce. Right now, we are a fairly high-cost producer, which gives us fantastic leverage to rising gold prices, of course, but we would longer term like to bring our all in sustaining costs down to sort of the lower half of the industry. And Greenstone will go a long ways to doing that because, of course, when you've got big production with low ounces, that's really going to reduce costs across the board. We're also developing 2 other expansion projects that will have a significant impact on our costs over the next few years. So we're building, we're permitting and then hope to be building by around sort of the end of 2026, a big expansion at our Castle Mountain project in California that will take production up to 220,000 ounces a year at that mine, again, with all-in sustaining costs in the lower half of the industry. And then we're hoping to do a big expansion at our Los Filos mine in Mexico, which will add about another 120,000 ounces a year at that project, and again, bring those costs down. So there's lots of things in the works that will bring the cost down longer term, which is our objective. But in the near term, Greenstone in production will totally be a transformative asset for us, both by increasing production and then concurrently decreasing the costs.
No, fantastic. Rhylin, like how's the changed or the increased gold price affecting the business strategy over at Equinox? Are you accelerating certain programs? Or are you keeping pace to what you've planned before? Because we're looking at $2,600 gold an ounce right now, and I'm sure when you planned Greenstone, for example, back in 2021, the gold price was much lower.
Yeah. It doesn't change the strategy because to be successful in the mining industry, you have to build your business to be able to withstand the ups and downs of the gold price, right? So we try to be very conservative with our budget. Our budget right now is $1,875 per ounce gold versus prevailing gold price, which is around 2,600. So it's important to not let yourself get carried away with the gold price and change the way you do business, because you should be using these positive times to be stockpiling as much cash as you can so that you can withstand a drop in the gold price, which will happen eventually, hopefully no time too soon. And I think everybody thinks the gold price is going to still go up, but you still have to be conservative in everything that you do. So keep your eye on cost control. What it will allow us to do is get more cash flow, and we're going to use that to pay down debt. So that's our near-term capital allocation priority, is to pay down the debt load and get it down to below a 1x EBITDA ratio by hopefully 2026.
Yeah, let's expand on that a little bit. $1.3 billion of cash. Some of it is debt. Some of that is convertible into shares at a lower price than the stock is trading right now. Run us a bit through that. Like, how are you planning to pay that back? Do you see more stock conversions or debt conversions into shares happening in the future as well?
Yeah, I mean, the way we've been able to build the business over these years, you have to use debt to do that to a certain extent. We try to use cash as much as we can and to dilute as little as possible. But to do that, we've accumulated some debt. We've got a $700 million term loan, of which $600 million is drawn. So we've got a $600 million to pay back on that. We've got a bit of capacity if we need it, but hopefully we don't. When we bought the other 40% of Greenstone in May of this year, we did another $500 million term loan that we tapped onto that revolving credit facility. So that gets us to sort of $1.1 billion. And then we've got 2 convertible notes outstanding for a total of, the number escapes me at the moment. But anyways, they're convertible into about 48 million shares. So they're both, like you said, there's one that comes due next year and then one that comes due in 2028. At the moment, they're both well below share price, and so hopefully they do convert into equity, and then that allows us to both pay down the debt and improve our balance sheet.
How do you prioritize capital allocation right now? You mentioned you of course want to pay down some of the debt, but is that the highest priority right now? Like, just to sort of reiterate what you mentioned pretty much.
It is right now. So we were 2.5 years of a high capital intense period where we were building Greenstone. Now we want to take a breath from M&A, take a breath from building, and use our excess cash flow to pay down that debt. We think that's the best value for our shareholders, the best way of improving the business. And then it gives us flexibility. So we can start to fund things internally if we want to do like the build at Castle Mountain, or if there's an expansion we want to do at one of the other projects, we'll have more cash to be able to do that internally. And we'll be in a stronger position if another opportunity comes along. M&A is not our priority right now, but if something extremely exciting comes along, like Greenstone did. We weren't intending to buy Premier Gold when it came along. It came across our desk, and we're like, this is just too good to pass up, right? So if something similar comes along, we want to be in a position to be able to move quickly. So the key thing to do that is to pay down our debt.
Pretty much taking the bullets out of my revolver here, Rhylin. I was going to ask you about M&A and whether you're participating in the Newmont processes that are happening right now. Reason I'm asking, Orla Mining is buying Musselwhite from Newmont, and now here there's processes being run for other mining assets in the Newmont portfolio right now as well. Getting to 1 million ounces is not through M&A, it's all organic, just to underline what you mentioned.
Yes, we do have the capacity with the projects that we currently have in our portfolio to be able to get to that 1 million ounce target. There's no magic to that number. It just represents scale, high cash flow, liquidity. Hopefully by then we'll be paying a dividend to our shareholders. So it's sort of just been our vision since day one to get to that point. And then when we get there, then we start to look around to see what we can play with. M&A is not our priority right now, but we are always commercial. So Ross Beatty, of course, is a deal guy. He loves transactions. Our CEO, Greg Smith, his favorite thing is corp development. So they certainly are always looking around the world to see if there's something that fits in our portfolio that will be accretive to our shareholders and make sense. But it's not something that we're prioritizing. We need to take a breath now, get Greenstone ramped up to capacity, get our treasury in a better position, and then move ahead from there.
Balance sheet and cap structure is one thing. We talked about converting debt into shares. That adds to the share count. You're already fully diluted at about 512 million shares outstanding, which is not a small feat. It's still not massive, like nothing I'm personally too worried about. But is there a rollback or anything planned in the future?
It's, the number of ways that we look at returning money to shareholders. It could be paying a dividend. It could be a rollback. There's lots of things that we can consider. At the moment, we think that paying down the debt is the best way of doing that. I know that Ross Beatty wants a dividend eventually. He's an investor. He's our largest individual investor. That's certainly something that's on his checklist of what he wants to see from the company. But we do have a lot of discussions quite frequently about whether we should be doing a rollback, a share buyback, anything like that. So it's always something that we consider, and then we just try to make decisions that make the most sense for our shareholders.
100%. No, I appreciate it. Although I'm not chasing a dividend, I understand where the rationale is coming from. If I were to own a ton of shares in your company, I probably would love one as well.
I think it's just one thing that investors look for. It's a little check mark, right? Is this company able to pay a consistent dividend and sustain that? I mean, we don't want to do it until we know we're in a position where we can do it and make it last, right?
Yeah, no, it makes absolute sense. Just shows a bit of financial stability and planning and forward thinking to a degree as well.
Yeah.
Really, I have one last question. I've been scrolling through your presentation, and there's a chart in there that talks about substantial growth, attractive valuation. You are massively lagging behind on a price PNAF or the PNAF ratio, only 0.6. What do you think the biggest what do you call it? Is like the whole what's holding you back? Let's formulate it that way.
Yeah, that really is quite a compelling chart, especially if you're a new or a potential investor, to see the low valuation where Equinox Gold is sitting compared to its peers. Like, we're at the bottom quarter of that group. It's a bit of a frustrating slide for shareholders who've been with us for a long time, because they haven't seen, obviously, the share price appreciation that we would hope. It's been a few things. Obviously, for the last, again, 2.5 years, we've been building Greenstone. So a big capital build, 1.3 billion price tag for that project. We didn't own 100% of it during the whole build. We only were responsible for 60% of that. But still, it was a big price tag in a very inflationary environment. So there was lots of concern in the market about potential budget overrun. There wasn't in the end, which was fantastic. There had been a lot of very high-profile blowouts from other mines that were being built at the time, with both schedule delays and huge budget overruns. So there was a lot of concern about that. And every time one of our peers put out a press release that they'd had a problem, we tended to trade down with them, because it just amplified that concern that people had. Now we're in production, and we didn't get a huge bump, which is not a huge surprise, because now people have just sort of kicked that concern into commissioning. Can they commission and achieve commercial production? We've done that. So that's a check mark. That alleviates some of the concerns. Now their concern is going to be, how long will it take to ramp up to 100% capacity? So that'll be the first half of next year. So I don't think we'll see full valuation for Greenstone in our share price until all of those concerns have been alleviated, and that'll be the first half of next year. And then we've got these other two big projects, of course. So Castle Mountain is going to add 220,000 ounces, but we have to build it. It's about probably a 500 million price tag. tag. It's going to be, we have to update that feasibility. It's a couple of years old now. So there's going to be concerns about what's the price tag for Castle Mountain and when's it going to come online. And Los Filos, we're, hoping to do an expansion there, but there's some stuff that we're working on with the communities down there. So there's a little bit of concern for people from that perspective. So I think there's just, everybody knows what the potential of the company is. Everybody loves the growth profile, the fact that we could add, another 700,000 ounces of production in the next few years, and that's all internal growth, no M&A required for that. But there still is some spending required to get there, and some, there's always risks along the way, like a permitting delay or who knows. Like there's so many things that could happen, and the market these days tends to be pretty skittish. So I think the people who have that long-term horizon that can just buy now and just hold and wait and just trust that the management team is going to get to that end objective are able to do that. Other people try to wait it out and find a different risk entry point sometime down the road, which is fine. We love that there's different kinds of investors out there. That's what gives us the liquidity, right? Is people taking their short-term horizon or their longer-term horizon. I think we've got a fantastic team here. We're all working hard. We're all really focused on building a legacy. We're not building this to just have it sold in the next 2 years. We're building something that we want to be like a gold mining company that's going to be around 50 years from now, that our kids and we can look back on and be super proud of what we built. This huge company that brings a lot of value to shareholders, a lot of value to community partners, to our employees. That's what we're building. This really feels like a big family working on some sort of family legacy. So I think it's frustrating to see the share price so low in the near term, but I think we're all very confident that we're going to get there in the end, and that's the strategy.
Yeah, we should end on that beautiful note, Rhylin. You just mentioned it really is close to my heart because I'm a long-term investor. When I come into a company, it doesn't matter what stage, I'm usually long-term focused and try to build something, right? But I do have to ask one last question, and on Greenstone that just came to mind is, when you made that build decision, what gold price did you use back then, and how's the current gold price affecting the IRR and the economics of the project?
I do not have an answer to that, Kai. I'm so sorry. It was much lower than it is today, I can tell you that. So to be able to bring such a large, low-cost gold mine into production in such high gold prices is amazing. Like the timing couldn't be better. So we're super thrilled to see it moving ahead, and we're just looking forward to be able to announce that we're at 100% capacity, and then sky is the limit after that.
Yeah, no, absolutely. And maybe to summarize the conversation, Rhylin, like what are some of the next catalysts we can be looking forward to?
Well, certainly any positive updates from Greenstone. Like this quarter, we only had a partial quarter. It's not at capacity yet. So I think every quarter to be able to demonstrate to people that the Greenstone is ramping up, that the costs are coming down, all of those are going to be positives. Any clarity on timing for when we're able to move ahead at Los Filos with the work that we're doing there with the communities and how that will affect the potential expansion, because Los Filos is a high producer right now, but also a high cost producer. So any positives that we can make at Filos to bring those costs down will have a substantial impact on the company. Obviously, gold price, we move with gold price. So gold price goes up, we're going to go up right along with it. We're working on an underground expansion at Arizona. So when we start that underground portal next year, I think that'll be a positive catalyst for the company. But really, all eyes now are on Greenstone and how that will improve the cost structure of the company and the production profile.
Yeah, no, fantastic. Congratulations on the commercial production there at Greenstone. And it's always great to catch up with you, Rhylin. We have to do this again very soon. Really appreciate it. Equinoxgold.com, I think, is the website for more information.
Yes.
Fantastic. Rhylin, thank you so much for joining us here on the Gold Newsletter for this update, and everybody else, thank you so much for joining us. I hope you enjoyed this conversation with Rhylin Bailie. She's the VP of Investor Relations over at Equinox Gold, and feel free to leave some comments down below. We chat often, so I can forward those questions in case she doesn't see them, and we'll get back to you with answers. Thank you so much for tuning in. We'll be back with lots more here on the Gold Newsletter channel. Thank you.